Hello everyone, this is Rakesh Kabra, your accounting instructor with a new video. In my previous video, we have seen that on Jan 31st, cash book and bank statement both were showing different balances. And the difference was $1,350. And the moment we find the difference in balances of both the books on a particular date, we need to prepare bank reconciliation statement. And the purpose behind preparing bank reconciliation statement is what? Just to ensure that the difference is not because of any fraud. So that's the only sole motive behind preparing this bank reconciliation statement. So in this video, I am going to explain you what are the steps we need to follow to prepare bank reconciliation statement. So here we have those steps. So the first step is what? Update the cash book. So when I say update the cash book, I mean rectify error, if any. If while recording transaction in the cash book, if we have done any error, so that error we have to rectify. And after that we need to see those figures which are in bank statement but not in the cash book. So those figures now we need to record in the cash book in order to update the cash book. So let's start. So first I will update the cash book. So when I prepared the cash book was showing balance of $7,150 earlier. So I will start with this balance. So I will write here 2019 and Jan 31st, and it is showing debit balance. So I will write here balance brought down, and the balance was $7,150. Okay, so I will start with this balance. Now we need to rectify the error if we have done any error in the cash book. So yes, here we have one error. Transaction number 4. We paid salary by check $500, but in the cash book, in the bank column on the credit side, we recorded only salary with $50. So I entered 450 less here, it means. So now I will enter that 450 in order to rectify that error. So 2019 Jan 31st, and I will write here error corrected. So point 1 is done. Now the second point is what? Record those figures which are in bank statement but not in the cash book. So we need to find such figures. So here we have only one figure. So and what is that? So this is basically direct deposit by a customer. One of my customers directly put $1,200 in my account without informing me. So that's why this 1200 is not entered in the cash book. So now, and it is there in the bank statement. So now I need to record this 1200 in my cash book. I need to update the cash book with this 1200. So basically this is the money which I got from my customer. So bank balance will increase. So increase in asset debit. So debit side I will record this 1200 and I will write here trade receivables. And I will put the date Jan 31st because on this date I got this information. I got the bank statement from the bank and I got this information that one of my customers put $1,200 in my account. So now that 1200 I will record in the cash book. So second point is also done. So I am done with the step number 1. Now what is the step number 2? Compute the updated balance of the cash book. So let's see. So for that first I will make total of debit side, and total of debit side is 8,350. Same total I will write here, and from this total I will subtract this 450. So the new updated balance of the cash book is $7,900. Balance carried down. So Jan 31st. So after following first step, the new updated balance of the cash book is $7,900. And now I need to follow step number 3, which we will see in my next video. So see you soon.